Hey guys, what's going on? I am super excited to have Jeff Zananiri here today. I hope I said your last name correctly there.
Excellent pronunciation.
Is that right? Or how would you say it? Zananiri?
Exactly. Zananiri. Zananiri, yeah.
Okay, cool. And so you guys that have been watching my channel for a while will have seen me talk about monthly money flows and my results with the service, and it's been very, very good. And I know a lot of you guys have probably joined the service already, but today I'm hoping to talk to Jeff about some of the details about the service and also his new exciting service, which we're going to talk about as well, which is going to be pretty exciting. So it's like monthly money flows, but on steroids. So you guys are going to get way more picks, and it's going to be really exciting. Any links that we talk about are going to be in the description below, so you guys can go and just check those out, basically. But Jeff, it's really great to have you on the channel, and I was hoping to hear a bit more about your backstory. I know a little bit from this interview that you can see on the screen right here with Ben Sturgill, but I don't know the whole story, so it'd be really interesting if you could start off with telling us a little bit about yourself and your hedge fund history and all that kind of good stuff.
Hey, Russell, thank you for having me, first of all. I'm happy to share my background. So as you can see, I'm wearing this Yankees hat, which is obviously a symbol of the Empire State of the great city of New York, which is where I'm from. And so my career takes me back to Wall Street. And I started in the game in the late 90s, working for a very legendary investment bank called Bear Stearns. And so the funny part is that, you know, back in the day, and this was predating like algorithms and quants and things like that. You had different types of traders, right? So you had floor traders, which was a very big thing still in the 90s. 80s, it was huge, but it was starting to switch a lot more to computers. But I came out, I had this very serendipitous luck to graduate from the university in 1998, which is when the NASDAQ was starting this parabolic run. And so investment banks like Bear Stearns, like Lehman Brothers, maybe not Goldman, who were like, you know, wanted only Harvard and blue bloods and the silver spoon crowd, were dying to get new traders, to get new people in there to service all the accounts, to trade all these stocks, to trade over the counter stocks. So I got a job at Bear from a big state university, Florida State University, which is the state that I live in now. My parents have moved there.
Oh, you live in Florida? Cool.
Yeah, I live in Miami. And so I was able to still get a job at one of the top investment banks from a state party school, just because I had passion and desire, and I was already trading out of my dorm room, and I was a bit of a stock junkie, and I was kind of like, you know, like anything else in life, when you have passion about something and it comes through, it's contagious. And so the guy who interviewed me was like one of the top directors at Bear, and he was like, "I like you, kid. You want to start Monday?" And I was like, "Hell yeah, let's go." And so, yeah, and so I would have to wake up at like 5 o'clock in the morning, take a train, you know, sit on the platform. I was living in Queens because at the time the wages they were giving you wasn't massive starting right out of college, like straight away. And I would be on the desk. I would be at analyst meetings where they're doing all the upgrades and downgrades. And then I have to take notes and understand what was going on and get a feel for the market, like straight out of the gates. I had to figure this shit out. And then I had to relay the information to my MD, who was one of the heads of institutional sales. And then we would go through calling, like old-fashioned calling with the old phone, big clients, big funds. This is happening. These guys were upgrading. These guys were downgrading. We expect ACB to do this. We expect the Fed to do that. So it was kind of like, I don't know how to say it. It was like drinking through a fire hose. It was kind of like learning about, like, it was sink or swim. You can either do this, kid, or you can't. You could either figure this out or you won't. But you have to hit the ground running and you have to get on it right now. And so I adapted because I loved it. I already knew about a lot of it. I worked very hard. And so fast forward. So I was in sales, but I was covering buy side. I was covering funds, portfolio managers, traders, hedge funds, institutional desks, equities, U.S. equities mainly. And so I was straight away into the stocks. And because it was the NASDAQ at the time, stock trading was massive. Options trading was massive in stocks also. And so, but I was like, I need to get to the buy side. I don't want to be telling somebody to make a decision, even though I was getting paid on my good ideas and I had to have ideas and I had to have a feel for the market. I was like, I want to be the guy on the other side getting that call from a kid like me, from a dude like me, and then pulling the trigger, just making discretionary decisions on trades. And so I got to move over to the proprietary trading side, and was offered a position to move back down to Florida, which is, I went to college there. My parents were living down there. My mother was living down there. And a big firm in New York called Schoenfeld, big hedge fund now, was opening a prop desk in Boca. And so they were like, you have awesome experience at Bear. Come to Boca, help open the office. Would you like to go to Boca to open? This was 2001. So this was like 3 years later, almost 4. And they were like, do you want to come down and help open the office? And at the time, this was like a month before 9/11. Right. And I, again, serendipitous luck. I was working downtown in the city of Manhattan in the financial district. Yeah, on Wall Street, literally, like taking the train every morning through the World Trade Center. And freezing winter. I remember getting offered the job. It was like, I don't know, like late February, early March, and still snowing in Manhattan. Sorry if I'm boring you, but it's a cool story. Oh, and so the guy was like, and it's like, you want to move to Florida? And I was like, hell yeah. So I moved to Florida in, June, late June, early July. 9/11 happened. Sadly, I had a bunch of friends that were trading at Cantor, that were trading at Morgan Stanley, and it was a disaster. It was a terrible situation. But my fate was a different path. I had to be down in Florida. And so I was trading for Schoenfeld. Bear market happened. So I was like, kind of like, they say the market that you start in is kind of like where you're born. And it kind of colors your strategy, your style, your philosophy, your biases, so to speak, for the rest of your trading life. So if you started trading, for instance, now, for the last couple of years during COVID, if you're a young person, then you're going to think that like you have to be TFD nonstop. You just have to buy every dip because it's going to work out. And that's just what the market has taught you to do, right? It's rewarded that sort of behavior. Yeah. And so I started, and it was a very strange time, like in the middle of the craziest bull market. And people think this bull market's crazy, but the NASDAQ in the late 90s, early 2000s with the dot-com was even crazier, because you had a NASDAQ go from 1,000 to 5,000 in basically a 2-year period at 5x. And you had stocks and IPOs that were coming out doing the stocks were going up 150, 200%, 300% in a day. Options going up 5,000% in a day, And so I always think back, like I was born in like the roaring 90s, that's how I think about it. I was literally, my career was born in a go-go period where greed was in fashion. So I think a little bit of my mentality is always kind of going to always be greedy. Is going to always be looking at the potential of enormous moves. Now, the backside of that dot-com move was a blow-up. The NASDAQ blew up shortly thereafter. Before 9/11 even, we were entering a recession in the United States. Valuations were coming down. Cisco, which was like a $150 stock, was trading at $20. A lot of people ask me about NVIDIA now. I'm like, it reminds me a lot of the Cisco story that was happening in the late 90s. But that sobered me up. That sobered me up quick. So it was like, all right, well, maybe it's not always parties. Maybe it's not always, champagne and clubs and parties. Sometimes, reality comes back in. So risk happens fast. Yeah. So a couple of years, about a couple of years after trading with Schoenfeld, a hedge fund, an old colleague of mine, a lady who was from Bear, was like a very, very successful, on the rise hedge fund that's only been around for a few years, 4 or 5 years. They're moving to South Florida from Chicago. Mm-hmm. And they were big options traders. They were big volatility traders. They traded arbitrage, and they traded equities all over the world. So I knew about this U.S. trading style. I knew about American stocks, basically growth stock strategies, momentum strategies, swing trade strategies. But I didn't know about arbitrage. I didn't know about international arbitrage. I certainly never traded currencies. And so I was like, I don't know. I'm like, well, am I the guy for these people? And she's like, well, they really wanted somebody from New York. They really wanted somebody from one of those, like from a Bear, from a Lehman. So you fit that pedigree. So they were like, come on in, interview. It was like sitting down on a spaceship. They had algos already in 2000, late 2003, early 2000. Is that right? Wow. Okay. Yeah, they had robots trading stocks, like buying Nokia in New York, selling it in London, and doing it pop, like nonstop all day, and then looking, using these spreadsheets and these advanced algorithms. And I was like, yeah, I want to learn that. I'm like, I'm math driven already. I'm a statistical probability type of person already. And so I was like, it just spoke to me. So I went in and I worked with them for 10 years. I stayed with them for 10 years. And, you know, my professional, I left them, one of the partners left and was like, so to give you an idea of this fund, they were Goldman's largest client, Goldman Sachs's largest hedge fund.
Really? Oh, Jesus.
By commissions paid, not by assets under management, by commissions paid in Europe. But then they came to the States. And the reason we were paying so much commission is because we were trading like crazy. We were rotating our books like nuts. We weren't holding stuff for 1 year, 2 years, 6 months. We were turning over the book every couple of days, built like $1 billion, turning it over every couple of days. And so I got to learn about equity trading all over the world, futures, FX. But one of the main partners was stepping down, and he was like, and I was, you know, in my 30s at the time, stepping down, had a great career with them, made boatloads of cash. And he was stepping down and everything was going to be reduced. And I was like, you know, I'm going to go just trade for myself at this point. Yeah. I don't want to drive into an office anymore. Like,
right. No, I totally agree.
I know what to do. Like, I know what to do at this point. I have some dough. Like, I'm not going to go sit at your desk anymore. Like, sorry. Just, that's not what I want.
Makes perfect.
Yeah, because it was kind of like a moment in time too. Like they were like divesting a lot of the capital. They were reducing book sizes and everything. And it was, but anyways, so fast forward a couple of years of doing that, I was kind of bored trading just for myself. And I was like, well, I had a couple of friends that were like, well, we teach and we're doing newsletters and we teach people how to do this. Yeah. And I was like, oh, that's neat. And, you know, like all these algos you could get now, you know, VWAP strategies, you get all these things at Charles Schwab, Thinkorswim, you know. So I was like, wow, that's interesting. I can help people learn how to actually make money in the market, like with professional style strategies. There's a huge demand for it. I have a community of people that I deal with on a daily basis. So it's not so lonely. It's not so solitary. Yeah. Sign me up. I get to help people. I get to make friends. We get to make money together. Like win, 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 win. Karma's good. You know, I believe in like, you know, higher power. And I'm like, karma's going to get good. The goodwill is going to help and everything's going to be a virtuous cycle, so to speak. Yeah. And it has been that. So that's my background. Sorry to go on for so long, but I just really wanted to like give you just an idea of where I'm coming from, why I do what I do.
I think that's perfect because a lot of people that are running services don't have the qualifications to do it. And clearly you do. And that's what I really love about your service. A lot of these services now, it's sad, but a lot of them are run by like 20-year-old people on Discord.
And journalists and stuff sometimes too, right? Like people that wrote articles but never ran money, don't know risk, don't understand timing, don't understand these things. Yeah.
Yeah, and that's why I'm so excited about your services. And so, because obviously I watched the interview with Ben Sturgill, which is on the screen.
Yeah, Ben's a great guy. Good buddy.
Yeah, he's great, and he interviewed you, and I watched it, and then I signed up for your service, which is the monthly money flows or trading calendar stocks, which is something that really appealed to me because I prefer high quality trades over like I don't want to trade too much and just trade like over trade and trade badly. So the idea of trading like one solid stock at the start of the month. Is really appealing to me, and so far I've had a great experience with your service. So,
I'm happy to hear that. That's the point. That's the point.
It's been a lot of fun, and sure, there's some losers, but there's all like the winners can be quite large, like 100 to like 400% winners.
Well, that's the math. That's the elegant math of like a true system with edge. Is you're gonna have losers. So if anyone sits there and they say to you like, "Oh, I never lose," well, run the other way because. Yeah. You know, the only people that don't lose are the house, and the house are basically like the Goldmans of the world and these guys, and they don't lose because they're just the reason they don't lose is because they're trading across every major listed exchange on planet Earth in every asset class. And so the system is tilted for them to make money. But every system that we have is going to have a little bit of a drawdown period. It's going to have bad ones, but the beauty of my system is the bad ones don't hurt you as much as the good ones make for you. And I make more money than I lose. So if you're winning at a high percentage and you win much bigger when you win than when you lose, at the end of the year, you're going to have a lot more money in your account than when you started, which is the name of this game anyways.
100%. And so guys that are watching this, we're actually going to show a little bit of the track record for monthly money flows and the recent ones. So.
Excuse me.
And so if you're looking for the link will be in the description below. It'll take you to this page. You can go and watch the interview with Ben Sturgill. It's really a lot of the guys will know that Ben Sturgill from previous experiences with him, and so he does a great job, better than I'm doing, interviewing you.
No, you're doing great.
And so you can check out this landing page. It's got like all the information you'll need. Basically, it's one trade within the first few, maybe like a week of the month opening. And we're going to go through an example in a minute on Dash. But basically, it's within a week you sort of spot like where the institutions are putting all their money for the month.
That's right.
You jump in to go bullish, kind of ride that momentum as well. It seems to be the secret sauce.
Always bullish with this strategy, because it's really like, so think about it like this. So in the short run, you have all kinds of players. You have hedge funds, you have people that go short stock, you have retail traders, you have market makers. But in the longer run, the biggest flows are run by pension funds. They're run by long only asset managers. And so what I'm really trying to identify early on in the month, and the thing that all my strategies have in common is that I think very intently about who's doing the trade, and what their holding period is for. Yeah. How long do they intend to be in this trade? How long is it going to take them to put this trade on? And how much can they put into it? And so if you guys aren't thinking about these concepts in your trading, you should start. Because I know a lot of the other strategies that I see out there are strictly focused on price action.
Like technical analysis kind of thing. Yeah.
Technical analysis, like it's like playing checkers when you should be playing chess. Like you should be looking at the world in 3-dimension, 4-dimension, even if possible. But like looking at it very flat and just saying, I like something at 50 and then I want to sell it at 60. Well, if you're going to sell it in 10 years at 60, was that a good trade? No. But if you're going to do it in an hour, that's a different proposition. And so I'm always thinking about time, and I'm thinking about who's doing the trade. So with monthly money flows, I'm trying to identify the biggest flows in the market. And so typically these guys, Russell, are putting on positions that you can't put on like you or I in a couple of trades, wherever you want it, at that point in time in the morning or in the afternoon at 11 o'clock at $46. They have to put on a trade because they're putting on hundreds of millions or billions, and they don't want to impact the market. They put the trade on over the period, usually weeks, because they're going to hold it for years, right? And this is a concept that I want to talk about also with implementing my strategy also, is if you're going to hold the strategy for a month, a lot of traders make the mistake of putting all their eggs in their basket and being very exposed to price movements in the short term the first moment they receive the email. So I teach against that. I teach to scale in. And so the same way I teach my students, and we were talking about this off camera before we started, with the monthly trade, maybe over the course of a couple of days, maybe even a week, wait a week, put some on the first day, put some on the third day or the fourth day, with the idea that we're going to all exit it at the same time. We exit it at the same time, usually right at the end of the month. You'll get a nice blended entry point. But institutions that are buying to hold for years in the billions are doing the same thing, but they're doing it over the course of the entire month.
Right.
So they will say, okay, this month we want, by the end of the month, I want to have, 150 million shares of this stock.
Right. And this is from, like, this because you were part of
I was part of that process. I was getting those orders. So all my, things change. Sometimes the markets will change, news will change. You'll have a war. You'll have a Fed do something crazy. You'll have an earnings news bomb. So things do change. But for the most part, these trades tend to continuously cycle with that same duration and that same cadence. So my system is just aiming at exploiting that, riding the coattails of the big money flows. And just making some nice change on that happening.
Yeah, definitely. Are you looking at dark pools, or are you mainly looking at like block and sweep type stuff, or what's your kind of thought?
Block and sweep. Yeah. No dark pool. Dark pools are more important for, the big funds are doing everything above as much as possible because they don't care, Russell. They don't care about, saving 100 basis points on a trade on the entry or slippage as much. They care much more about, getting a nice blended entry price on their position incrementally with large institutions. And you can get picked off in dark pools. By picked off, I mean somebody on the other side knows insider information. They don't want to do the print at the New York Stock Exchange or whatever. I don't know. So they do everything much more above board is what I'm trying to say.
Yeah, definitely. I think money flows is hard. And I think that's where the advantage of joining a service like yours is important, because you don't really know if you just get like some cheap like service, where you just like kind of look at the flows. It takes a long time to be able to decipher like what is actually going on. Like, are they hedging? Are they closing the order? Are they selling the calls or selling?
Well, a lot of people look at random noise so they're not considering who's buying it for what kind of returns, for what kind of holding period. They're not considering the animal that they're fighting against. They're not considering it at all. They're just considering price action and volume. So they look at it and they just go, like unusual option flows are a great example of this. I don't know if somebody's hedging against another position. I don't know if, sometimes you'll see a block and somebody will be like, wow, there was a big trade. There's a big call sweep in an option like an hour ago in NVIDIA. And I'm like, well, somebody sold that too, right?
Right.
You don't know. You don't know. Maybe they're hedging the other side of their book. They want to be delta neutral. This could be delta hedging. So with the most obvious thing is if you see a stock trading with 75% of its normal daily volume, 175% of its normal daily volume in the first trading day of the month and breaking out. And then it does 200% the next day. Then I know there's only a couple of people in the world that are doing those trades.
Yeah.
So
that's cool.
Statistical arbitrage, but considering like the likelihood that putting the pieces together is a big part of this for every trade.
I think that's where your experience really pays off. And these guys can get monthly money flows for, I think it's ridiculous. The cheap here is right here. $49 for the year. I mean, that's insane. With a refund guarantee if you're not happy with it. Like, it's a crazy deal.
I get upset even when I hear that number, because I know the amount of I know the amount, and I'll tell you why we do it. And there's a reason, but the amount of like experience and bang for your buck on this is so high. Because people so this in our industry, this is like this is what they would call like an introductory product. So like
a front end type of thing.
And the reason that we do them is to widen the net of potential people that are going to trade with us, right? And so I set out to do a trade that was like low commitment time wise for a new trader. So you don't have to spend a lot of time staring at your computer twice a month for 10 minutes each time a month, as you know. You could spend more time. But so I set out with the intention of somebody that didn't know much, doesn't have a lot of time, will only want to put on one trade and hold it for a period of time. And that's how I set out to do it. That's how I said, and the results have been fantastic. They've exceeded expectation. Now, do I think that it's worth $49? I think it's worth probably at least 10, 20 times that. But I'm very happy with helping people that can't afford more, with otherwise wouldn't have traded, get much more significant returns than just owning like a SPY ETF or a QQQ ETF or something like that.
I mean, it's absolutely insane. You get somebody with your track record at Bear Stearns and all this stuff for this low cost. I mean, it's crazy. I mean, it's fantastic.
I have much more in-depth services we're going to talk about a little bit later.
Yeah, we'll talk about that.
They're more, but they're for people that are wanting more. They want to trade more. They want more opportunity. They want bigger opportunity. Yeah, and we have that also. So
for sure, and we're going to talk about that. I was going to talk about the recent closed trade that you did on Dash. So I've pulled up the track record inside the dashboard. So I'm a member of both services that we're going to talk about very quickly here. We're going to talk about monthly money flows first. This is the track record for that, and you can see so Jeff alerts both the stock price and actually like an option. It's always a call option because it's bullish and it's got that momentum and there's people buying. So you can see the top line here is Dash, and this was one that closed just a few days ago, I think, or it wasn't that long ago at all. Yeah, and you can see on the right. I made 80% on it, but you can see over here it's 63% was what Jeff closed for, and 13% was the underlying stock Dash that moved up. So you can see this was phenomenal, and this was a crazy trade. This actually, I think a lot of people actually got out of this sooner than Jeff did and made more profits, because it actually went in our favor for the first week or two, and then it kind of declined off, and you could have got in for a much lower price. But
For
this
sure.
happened like the day before it was supposed to expire, so we even had a lot of theta decay, but still the options. And I think that's how I managed to benefit a little bit more than you, because you closed
It
this out.
happens a lot, but I'm just trying to call balls and strikes. And this is the thing when you have as many subscribers as I do.
Yep.
And I have thousands of them, as you know.
Yep.
If I tell everybody to get out, in the next 10 minutes, like, you have to use a little bit of your own. I give you the instructions, but I want people outperforming. I want people to get out a day before. I don't give you like a 5-minute window or a price. I say all day, trade out today. Let's trade out today. And the reason is because we will affect the price against ourselves. If everybody it's like everybody trying to get out of a burning building at the same time.
Yeah, exactly.
So often people have a much better return than the track record. And I love that. That's the point. The point, consider the reverse. How many gurus out there put on trades that you can't even affect, and then you can't even put them on, and then you're looking at it and you're like, wait a second, dude, what are you talking about? You made 300%. I can't even get out of this trade. I couldn't even put it on. And maybe I made 4%. Maybe I lost 50%. My trades are going to be right around where the tracker is. And as you can see, there were some losers, but the winners are 400%, 150%, 70%.
Yeah.
And so when you take that kind of when you go look back over the year of doing it, results speak for, in the multiple, triple, 100%, which is fantastic, right?
People need to stick with it as well. It's the track. Like, people always get stuck up with like, how high is the win rate? Now, the win rate's not super high with this, but the winners far exceed the losing trades. And you can play it differently as well. I mean, look at Dash that I have on the screen right now. I hope you can see that. I've just been switching screens, but can you see the Dash thing at the moment, or can you?
Russell, this is something you have to understand with win rates. And this is something a lot of people don't understand. So what good is a program that wins 8 out of 10 times, but 2 out of 10 times you give back 150% of your
Exactly, yeah.
What is that system? That's a lot of systems, especially spread systems and options. They do that all day long. They do what I like to call picking up pennies in front of a freight train. My systems are the inverse of that. My systems are like, well, I want to win 6 to 7 out of 10 times. And if I can do that, I'll be all world from a hedge fund hitting percentage. But on my 6 or 7 times that I win, I want to make 150 to 200% of what I make when I lose.
Yeah. And that's hard psychologically for some people, so it's nice to have you guiding.
That's why most people lose. That's why most people don't make money actively trading. Is because it is hard psychologically, but you have to philosophically change the way that you are. I'm sorry to interrupt you, but it's a very important point. It's a very important point.
Yeah, definitely. So here's the Dash chart. You can see the circle on the left here is where Jeff alerted on the 6th of August. So this one took a little longer than is typical. Typically, it's only like 2 or 3 weeks hold. This one took a little bit longer.
A little longer.
Although not technically. You could have gotten out here around the 15th of August for probably similar profits, just because theta decay took out.
There were people who put on the 125 calls that made 200-300% because I gave both. I gave either one. I split it between two options for that month because of the liquidity. And so the people in the 125s, there were 200-300% returns on those.
Yeah, definitely. I think I took some profits here, and I took some on this gap up as well. And it's still going up. I mean, look at this thing. It's still powering up, over the last. This is the daily chart, by the way.
This is the funny thing is you can see at the beginning of the month, you can see this massive gap and this massive candle. What you're not seeing there is the volume. The volume was extraordinary for those days.
Was it? Okay.
And so when you have that corroboration, when the story all adds up, it's kind of like being a detective. Trading is a lot like being a detective, right?
Yeah.
Like when you're questioning somebody and their story has one part that's missing, that doesn't add up, then you're like, I don't believe in that. But when everything is lined up and everything is adding up, then you say, okay, this is the case. This is the case. This person had intent. They were at the place they were supposed to be at. They had everything. Everything lines up. Trading's the same. So you have atypical volume, an atypical move, a breakout. It all lines up, and then you have the potential for explosive moves. Now, why this system is great for kind of like a more passive strategy, I would say, is you're doing you're trading with passive investors when the bulk of the returns are happening. Stocks make 80% of their returns in 20% of the time. So the whole goal is to identify when the move is actually happening, when that big move is that continuation move is happening. And it happens when institutional money is flowing into the stock.
Yeah. Isn't that the Pareto principle, that things make, 10 or 20% of the profits, and that sounds like the Pareto principle.
You make 80% of your money in 20% of the time. We do as traders too, and stocks do too.
That's like a universal law that seems to apply to a lot of things, and obviously applies to this case as well. So yeah.
So I'm just trying to be active in identifying those moments rather than just sitting in it. So NVIDIA, right? NVIDIA is one of the best stocks this year, but it did its move in January, in February. Yeah. So what good is it to trade NVIDIA institutional flows? And a month after that, maybe not so good. Great trade in the beginning of the year, because that's when the move happened. So that's an example of that.
Definitely. So monthly money flows is one of my top recommendations for people that are looking to follow somebody who has really high credibility, and also that just wants to like swing trade, because you don't have to be glued to your computer all the time. And so definitely check out the link in the description below. It'll take you to this landing page. You can watch more with Jeff and Ben here. And also there's a bunch of bonuses as well down the bottom here. If you go down, there's like a bunch of stuff here. So talking about the calendar stocks, which is this idea of buying at the start of the month. And so there's a whole bunch of stuff here. The value is superb. So I'm really excited about it. And I hope
Thank you, Russell. I appreciate that.
Definitely. So let's touch a little bit on your gamma code. So I was just recently in the gamma code, which is this page right here. So I'll leave a link in the description for gamma code as well. And this is I think this is a fairly new service for you, right? Like this seems to be.
Yeah, it's a newer service, but this is what we call a back end. So the first one was a front end. So bringing people that are new to trading. This is like you've graduated from monthly money flows and you want to trade more and you want more opportunities a month. You don't want just one trade a month. You want more opportunities. You're already making money. You're active. You have more time. You have a little bit more money, and you just want to learn more. You want more opportunities. So Gamma Code is also taking this idea that trades are happening in a period of time that I want to capitalize on. And instead of using monthly options, I'm using weekly options. I'm trading multiple times a month. I'm also buying puts, which is looking for bearish positions, because sometimes you say, well, monthly money flows doesn't always work, which is true. And you know the reason for that is because we're long only, right? And we're taking a very rudimentary approach to the market. But with Gamma, much more sophisticated, much more closely aligned to what I did as a hedge fund manager. And we're looking for calls. We're looking for puts every day with a possibility of making 300%, 400%, 500%. So instead of having one trade a month, you're going to have a minimum of 6 trades a week. We're working on having 10. And so they're swing trades. They're trades you can put on for a day, no less than one full day, 24 hours, unless we've already hit our target or been stopped, but up to 2-3 days holding periods. And so, for instance, this week we had an unbelievable trade already. Pretty exciting.
Pretty cool. So I'll leave a link to join Jeff's Gamma Code in the description below. I was thinking one thing we might want to do here is share your screen with some of the recent results on Gamma Code. Does that sound like a plan?
Yeah, I'm happy to do that.
I'll remove my screen here, and then we can, if you could share yours, that would be
coming
awesome.
Right up.
Okay. Yeah. Because you've done really well. There we go. I see it popping up. So I'll just put it up here. There we go. So I'm going to make this full screen so we can hopefully read some of this stuff, because there's a lot going on here.
Yeah, if your guru doesn't have a spreadsheet, he's not a real guru, by the way.
That's right.
This is finance. So if they don't know Excel and they don't have spreadsheets, and they're not tracking all their trades like this, then they're not. Maybe you might want to look somewhere else. But you can see here. So you have these stocks. I don't know if I said this, but to be clear, this is automatically generated. This is an AI system, Russell. So I gave the inputs and the algorithm. Plus, the beauty of AI is it's taken math, logic-based decision-making, and it's adding like texture component to it, which would be like, if earnings have come out, what's the sentiment on the internet, what's Twitter's buzz, and I've put that all in. And so every day it's given me these positions in these trades. And what you want to see here is so we're trading weekly options. And so all of this green, this one is at a high hit rate. This is hitting at a 90% hit rate. Nice. But the beauty of it is that you have 600% returns, 400% returns, 800%, 364%, but they're coming at you much more. And so this column here is how much has the option moved. These are all options.
Yeah.
How much has the option moved from when we identified it as a trade. And so all of these trades, I would never put on a trade and say, well, it moved that much, but it was before I told people to buy it. These are all post when the Gamma service has recommended entry where you could have sold it, the potential of the trade. Now, of course, you don't always capture that full percentage, but let's say you capture 50% of 675%, then you have a nice 300% winner in the middle of, over the course of 24 to 48 hours. Doesn't suck. Doesn't suck.
Doesn't suck at all, man. For sure.
Doesn't suck at all. And so what's really crazy is that, the market's been really bullish this week. And we had a trade 2 days ago in Rivian that people exited for 250% in puts, Rivian puts. And so often the Gamma's giving me these trades and I'm looking at it. I'm like, wow, interesting trade. Why did it come up with that? And then a couple of days later, we were ahead of the curve. We're ahead of like the news cycle and everything.
Definitely.
Yeah. So exciting stuff. And again, it's for people that like started with monthly money flows, made a good amount of money, want to make more money, want more opportunities, are getting the hang of options, but taking advantage of all my hedge fund experience, but also taking advantage of technology and AI, which we use to generate the trade ideas. So it's even better than I can do discretionarily. There's a lot of me like manager selection in monthly money flows where I get a list, but then I have to invariably like say, no, this is the one. With Gamma, it's automatically coming out. Whether I'm asleep, whether I'm in the hospital, if I'm on vacation with my family, you're going to get those trades from the AI. The AI downloaded my thought process and the math inputs that I've given it.
That's phenomenal. Can you think of anything? I can't think of anything better, right? Like that's phenomenal.
That's what trading is now. That's what trading is now. And so like, the best funds in the world don't have people sitting there and waking up in the morning and saying, I love AMD. They have a computer that they have a computer that they've taught to say, well, if X then Y, it becomes an algebra equation, much more a question of calculus.
Kind of like these quants on Wall Street, right? Like these quants that do all these crazy things.
The thing about AI, I was one of the early quants. I was using all these. I was using algorithms in 2004. So the beauty of AI now is instead, I used to have to hire like a kid to code it because I don't code. So I'd have to hire a kid that knows Python and JavaScript and say, okay, listen, kid, if the market is up 1% and this stock is up 2% and this stock is got 15% from all-time highs, therefore I want to buy that stock if the option is under X and blah, blah, blah. I give it all these inputs. And so he would give me a code. I would put it onto this machine and it would just do it. But now I have that done by AI in a way that I don't have to like constantly update it. It's just generating it and it's giving you the fundamentals and it's phenomenal. Yeah. So people love it. The results are phenomenal. Our average trade has 120% upside from when we recommend it. Nice. And we have a 90% success rate in finding stocks and trades that go in the money at some point from when we recommend it, which is phenomenal also.
That is phenomenal. Yeah, I'm excited to get going with it. I was given access just recently on it, and I'm looking forward to getting some trades on it. And
there's a little bit of a learning curve because it's there's more meat to it, but I have a lot of training. Unlike monthly money flows where I come in periodically and I give like big picture overview, I'm in the Gamma code regularly, almost every day. We have a chat room, we have a community. I'm doing trainings, I'm doing live trainings at least once a week. So it's much more like hands-on, but it's also much more, it's considerably more expensive than $49 a month.
Yeah, definitely. It's in the sort of $2,497 range kind of thing.
The value is like again, another situation where the value should be $10,000 based on how much based on my experience and how much I consult on it. And the amount of technology that we put into it wasn't cheap.
Yeah, development is hard. Yeah, for sure.
6 months, 7 figures worth of work. So
yeah, absolutely. And so
worth it.
Yeah, it's fantastic. Yeah, I'm excited, and I think it's phenomenal what you've done with monthly money flows and now the Gamma code. So it's going to be a lot of fun, and I hope people see the value in this. I know a lot of people have joined monthly money flows already and are chatting to me about it, and I'm trying to give them some advice. But scale out a little bit here, and so maybe buy the dip a little bit, and it's phenomenal.
Yeah, trading itself is like you have to do it for yourself, right? You can get all the tools, you can get the ingredients, but like think about like cooking. Like it can tell you, put a pinch of salt, put a half a stick of pepper. But there's an art form to it too. You have to know when the timing of it to take the pasta out of the water. You have to know certain things by experience. But the good part is I've got so much experience doing it that I help my community get over that hump of that learning curve. With the little tricks of the trade, the art form aspect of trading that go beyond just instructions of the.
And that's where like the chat room for Gamma Code comes in, right? Because you can actually people, whereas with monthly money flows, there's no real communication. But so people are kind of left to figure out their own, but they should figure out their own risk reward, right? They should be like, okay, I'm up 80% and it's only been 2 weeks or a week or something. I might as well take it, even though
those are all things that I teach. Those are all things that I teach people too, right? So if we have a target, if we were halfway, let's say we have a target on the trade to make 100%, and let's say you've made 50% in the first week, there's no harm in taking half of it off,
right,
and re-entering it later. There's no harm in taking half of it and then put half back on. Maybe you get that dip, and that happens. That's the nature of the market, and that's why we're talking off camera. You were like, I don't go in all in, and it's my timing on entry has been significantly better, and that's often because I rush to get the trade out to the community as soon as I've identified it, but usually they've cooled it after the first 2 days. They get so excited to start it after the first 2 days that pressure alleviates and the stock can go back a little bit. So sometimes it continues and you're paying a little bit too much. But my point is that it always pays to scale into positions and to learn the tricks of the trade and to hone it as an art too.
Cool.
And that's where you want like somebody with experience on your side in your corner. And I think I have a little bit of an edge over like a lot of these other gurus.
Definitely. For sure. Yeah, no, it's true. And I've noticed they do tend to cool off a little bit. And so I try and
in the middle of the month, there's always like a lull. There's a little bit of a lull in the middle of the month.
Yeah. So for sure. Well, thank you very much for giving all your insight into this. I think it's been fantastic talking to you about your background and then also the insight into monthly money flows and also Gamma Code as well. And you guys that are watching this, if you're in monthly money flows, definitely look at Gamma Code as a potential upgrade because I think it's something that people could really benefit from. You have access to Jeff on the chat and a bunch of other people that are in the service, and I think it's something that could really benefit you guys.
A lot of happy customers. You come in the chat, you're going to see in the first day, like all these people that it's a party. We're having a good time. So
I checked out the
other day. Sports, like they say in sports, right? Like the people that are having fun are the winners. It's only a game if you're winning, and so for us, it's a game. I try to treat it as a game always.
Definitely. All right, guys. So I'll put all the links to these things. So monthly money flows will be in the description below, and then also to Gamma Code as well. And hopefully you guys will have some questions about this, and I can answer them when needed. And hopefully you guys can join some of these services because they really are some of the best value out there from what I've seen. I've been doing this for a decade now, so
wow,
I'm a member of most services, and I've checked out everybody. And that's why I really wanted to have you on the channel because I'm like, this guy's the real deal. He knows what he's doing. He's got more experience than 99% of people in the industry. So I think
there's a proper way to do everything. There's a proper way. I've been blessed and I've been taught by and trained by some of the greatest traders in history. And so the beauty of 2024 is you don't have to move to New York or London and take up and get on a train at 4 o'clock in the morning to try to sit at something, and just do all these things. You can sit at your computer. You can learn it yourself. You're limited by your own ambition, by your own willingness and attitude to learn. And so if you have people like me out there teaching things that you frankly had to used to be able to get a good job doing, and now you have access to it everywhere, which is incredible. But you have to be a little bit discerning in who you pick to follow and what you pick to do.
Yeah, because there's so much out there now. It's almost the opposite, right? Before it was impossible to do these types of services and educate people and help people. Now it's like it's a couple of clicks of a mouse and you've got,
Well, it's funny. It's like if you have somebody coming to fix your car or fix your air conditioning or whatever, if they can't explain it to you in simplistic terms, then are they truly an expert? And I feel like I'm pretty easy to understand in what I'm talking about.
Yeah, definitely. All right, Jeff, thank you very much for your time. This has been really informative and
thank you, Russell.
Fantastic. So it was nice meeting you, and thank you very much for doing this interview. And
I enjoyed it.
Hopefully our paths will cross going forward. Very good.
I appreciate you, man. Thank you for everything, and keep up the good work, man. Let me know how you keep doing with Gamma also.
I will. Yep, absolutely. Okay, thanks for your time. Thanks.
Thanks, sir.